Have you ever wanted to be a real estate mogul? From owning beachside properties in the Bahamas or on a private island, or maybe a commercial building right smack in the middle of downtown Manhattan. That's what we're talking about today. And the company is called FundRise, which they're not sponsoring this video in any way. I just really like the company and wanted to share it with my audience. And the way it works is pretty cool. If you haven't heard about it before, basically it's a real estate investment app that allows you to invest in fractional real estate. Think of it as like a crowdsourced real estate fund. And I know you might be watching this video because you want to diversify your assets, or maybe you're just tired of investing in the stock market and maybe crypto is a little too volatile for you. And not only do they give you a part of the rental income, but if properties also appreciate in value, you'll make some money on that end too. And that's the basic rundown of how it all works. But I also want to talk about the pros and cons of using FundRise, some of the risks that you should know about. And as always, I'll also share some other great ways to invest in real estate if you wanted some options. So to start things off, when I first heard about FundRise, I went to the App Store to make sure if it's even legit. It had 4.8 stars with almost 30,000 reviews, so obviously makes me trust them a lot more. So of course I downloaded the app so that way I had first person's perspective on it, and then I got into the interface, which then they had me do a personalized quiz. And when I did it, it gave me some ideas of how much I should put into the platform, and you'll probably see this too, but I wanted to share this because I thought it was pretty cool. Obviously the numbers you're gonna see on the screen here are estimates and can vary quite a bit, but it's using historical values, so they're kind of accurate, and you're gonna see that in just a second. So what these will show you is how much you're gonna put in versus how much you're gonna get back by the time you retire by using FundRise. And the first couple of examples are pretty basic. If you invest $10 a month into the platform, you would see a total return of $66,000 by the time you hit 67, which is 40 years from where I am today. So you have to take that into account as well. But not a lot of money, but obviously not a lot invested either. If you were to 4x that to $40 a month or $10 weekly, you would be looking at a compounded growth of $284,000 by the time you hit 67. Now, if you took it one step further and put away $50 per week, which I think is still pretty doable, and using the FundRise calculator, it equals $1.4 million by 67, which is a pretty cool number to look at because it's pretty attainable to reach for average income earners. Now, I wanted to blow that number up a little bit more and say if you had $250 per week to invest, which is $1,000 per month, and you were able to do that every single month from now until you're 67, so 40 years, you would be sitting with $7.1 million. Which in my opinion is really cool to see, really cool to imagine, but not entirely realistic for everybody, especially if you have a 401k, an IRA, you're investing in the stock market, you have your own business. All these things will eat up your funds and make that a little bit harder to reach. But with enough time and a constant increasing in your income, I think it's also doable. And even though it's not an absurd amount of money in terms of retirement, I'm sure that's gonna be worth a lot less by the time we hit our golden years. But what I thought we should do is we should also compare this to the S&P 500 to see if it's even worth taking the risk with FundRise, whereas we could put the same amount of money in the stock market and maybe have a similar amount. So this is what I did. I took the last two equations and put it into a compound calculator using the S&P 500 average returns of 10%, and here's what we got. In the first example with FundRise, you would have $1.4 million by the time you hit 67, but with the S&P 500 returns, you would have roughly 1.2 million. And that is of course with a 10% growth rate. You could have more if you pick your own stocks and do a good job at it, or you could have less if the market starts to crash a little bit more. But with this next example, it compounds a little bit differently because we're using bigger amounts of money, but here it is, that $250 per week put into FundRise is $7.1 million, but in the S&P 500 with a 10% return, you're looking at a mere $6.3 million. Now, the beautiful thing is both of these options are still fantastic, but you can see the power of real estate is a little bit stronger than just simple stock investing. But of course, that comes with its own risks, and we're gonna talk about that as well. For example, if we had another 2008 and maybe a couple of them before you retire, that might make the real estate market a little bit more bumpy, but it also means more opportunity to invest as long as these companies don't run away with your money. I hope the takeaway from those numbers is seeing how great the opportunity is with real estate and in comparison to the stock market, but also how great of a tool it is to diversify with both in case one crashes and the other one doesn't. Those are just a couple things to think about. as we move on to the risks. The first thing to remember is that FundRise is definitely a long-term play. Just like any real estate that you would probably buy yourself, you gotta think about the long term versus the short term because you never know what might happen. I've read reviews on people losing 16, 20% in just a few months on FundRise because they just got in at the wrong time and they put too much of their own money into this all at once rather than dollar cost averaging. So if you wanna do this properly, I highly suggest dollar cost average in just like you would into the stock market. Now, the other super important thing to remember is that FundRise will charge you between 1% to 3% fee if you take your money out of these portfolios before the 5 years is up. That's really important to keep in mind because if you're looking to do this in the short term and as a savings account, it's not gonna do as well because you're gonna be pulling money out and losing some of the cash just on that fee alone. Now, what is cool about them is that they allow you to invest into baskets of real estate and not just an individual property like Landa, but that's not necessarily a good or a bad thing. It's just the way that their platform works. I just wanted to get that clear before moving into some of the other risks, which the next one is the fact that they're not FDIC insured. And for some people, that's a really big deal. And if you want to be FDIC insured, go put your money into a high yield savings account, you'll be fine. But if you want to take part in this fractional real estate investing or getting those sweet, sweet, juicy returns, you got to take some risk, and that just happens to be one of them. And honestly, if the housing market were to take a crash and these companies were to fail, I think that you as an investor would probably be the last one to get bailed out anyway, so just something to keep in mind. Another thing you gotta remember is that FundRise takes a 1% fee, which is pretty much $10 for every $1,000 invested. So you gotta take that into account, and that is not including that 1% to 3% early withdrawal fee. And if you take all these fees into account, if you compound them over the long term and with more and more money invested, it's actually a pretty decent chunk of change that you don't want to miss out on. In fact, Tony Robbins talks about fees in a very serious way, and he says that if you're in it for the long term, you want to avoid fees at all costs, just because when they compound over your lifetime, it could be the difference between hundreds of thousands, if not millions of dollars in retirement, just depending on your income. But if you're looking at this from the perspective of, hey, I want to get into real estate, I don't have a lot of money to do so, and maybe I'd wanna use this as a fund 5, 10, 15 years from now to invest with into my own physical properties, well, guess what? This might be the app for you. Again, not investment advice, just the way I would personally use this app is in that way. Now, if I had millions of dollars to invest into real estate, I'd probably just avoid all the fees and all the headaches and take on the risk myself because I would get all the rewards myself. But again, if you don't have the time or the want, or you don't want to hire a management company or a general contractor to fix up the place and keep everything running smoothly, well, investing in fractional real estate might be the way to go. Honestly, being a property owner is somewhat nerve-wracking. You got to think about a lot of things all the time. For example, is my building burning down? Is it flooding? Are my tenants okay? Are they going to pay their next rent? And if any of these things happen, are you going to financially recover from any of this? But okay. Now you know the risks, you know the rewards. What are some other alternatives that you could possibly get into? Well, the first one I have to mention is Landa, because I've done a video on them and I think you might want to check them out if you wanted to physically choose the properties that they have in their portfolio and do the same thing that FundRise allows you to do. There is another app called CrowdStreet, which you actually need a little bit more of a startup fund of around $25,000 to get started with them. But the cool thing is that with them, your portfolio will be professionally managed and is a little bit of a different style of app than these two. Now, of course, there are other ways of investing in real estate. You can buy your own properties, you can sublease into Airbnbs, you can do all kinds of things, but you can also just simply buy REITs. If you haven't heard of REITs, what they are is real estate investment trusts. And here are some of my favorites on the screen. If you want to know anything else about them, let me know down in the comments. I'm happy to do a video on them. And don't forget to like and subscribe. It really means a lot to me as a creator, especially because it's free to do. And if you enjoyed, make sure to check out this video next because YouTube thinks you'll really like it. Peace out.